So, welcome, Tom. Thank you so much for coming and coming at the last minute. I really appreciate that. And I'm really looking forward to this panel. I think it's going to be fascinating. Yeah. And I was going to ask you obviously, you got involved in FinTech and the blockchain in China, and I'm
I started here, actually.
Oh,
Yeah.
okay.
Yeah.
So, do you want to tell me like what drew you into that and what you're passionate about?
Yeah, so blockchain is kind of a quite broad technology, right? It's horizontal kind of thing, cloud computing probably, or closer to the internet technology in general. So it spans across fintech, healthcare, and many other industries. But fintech is one of the core domains for that. So I started with blockchain probably about three and a half years ago. I was working in a corporate, getting bored, reading papers about blockchain, and got really, really excited. Haven't seen the kind of disruptive technology for a very, very long time. So got into it, got full-time, starting a company that's basically the previous company before String Labs, and then morph into the current business. So most of my entrepreneurial experience has been here in Valley. But I do go back quite a bit to China and talk to different folks in the fintech industry, blockchain industry, and there's some interesting kind of contrast between the two countries. Yeah, so like for example, in China, way more developed in terms of consumer fintech, right? You see WeChat Pay, Alipay everywhere, like even street vendors, taxi, all of them do WeChat Pay by default. They even prefer it over a cash, right? A traditional like cash business, they don't want to do cash anymore. Here, like Apple Pay, I don't know, it's less than 2% maybe market share or less, right? We don't use that much. Bitcoin, not much either. So it's a very, very different state. On the other hand, you have a more advanced thinking in general in the financial kind of world, right? But that doesn't translate into the technology world, which is kind of really interesting kind of phenomenon. Yeah.
So, and someone was telling me that when they go to China, they never touch their cash.
Yeah.
But when they come back here, they have to like...
Yeah, exactly. You go back to the primitive mode of going to ATMs, withdraw money. It's kind of interesting. And it only happens basically last 4 or 5 years. It's not even particularly long ago that we didn't even have credit card in China, right? Or it wasn't very popular at least. And now you don't even need credit card because you got online credits, consumer credits, basically. They look at your shopping history on Taobao, which is equivalent to eBay, right, basically, or Amazon, and then they look at your banking history, and then they give you credits on the fly, and you buy flights, vacations, anything. So.
And so, why do you think it's gone so rapidly in China? And it astounded me that 46% of fintech investment last year went to China globally.
Yeah, not surprising at all.
So why do you think that would happen there and not in the US?
So when I was in eBay US, I worked pretty closely with PayPal folks, and I was astounded. I also worked in Alibaba briefly before I came to the US, and looking at the pace of innovation, it's just incredible in Alipay versus PayPal, which in my mind really hasn't done much in the last 5 years. Like, what is a new product I can think of in a PayPal? None, zero. And it's incredible. They are a $50 billion company. So you got to ask, like, why? What makes that cause that kind of difference? There's, I think, probably two sides of it. There's many different reasons, structural reasons, but the one thing that strikes me most is regulation. If you think about what it does take to launch a new fintech product in the U.S., what are the teams and skills that you require? You'd be surprised to find probably half of the skill set is about legal stuff, compliance stuff, right? Lobbyists and all that kind of thing, and that really kills, I think, lots of the innovations. I don't think that answers all the, that's not the answer to everything, but that's a big part of it. And I think that's lots, so in some way I think China benefited from under-regulation. The flip side of that is obviously you do see a lot more scams, badly designed products, intentionally or unintentionally. For example, there's the P2P lending scam called Yizhubao, right? There's a platform that basically is a Ponzi scheme, and they ran away with $8 billion of P2P lending money, right? They're supposed to be a lending platform. They're not really lending money. They're giving the money to themselves, executive bonuses and some weird investments. So that is a flip side. There is a big flip side. And I think on the U.S. side, U.S. benefits from a very long history of scammers. So SEC knows very well, FinTech knows very well how to deal with that kind of thing. Right. But you have way more complicated, 10x more onerous regulations, which makes launching a new product really, really hard to disrupt anything.
And so you've had all this experience working in these companies. What was it that really turned all the lights on for you and got your juices going and made you want to work in this domain or have a startup in this domain?
Well, I think that comes to the other side of it. So blockchain, so part of the question is regulation. The other part of that is you realize the infrastructure for innovation is also pretty bad on the technology side. So basically, if you want to launch a FinTech product, most of the time you rely on the banking infrastructure. You rely on some kind of existing infrastructure, market infrastructure. And I think there's huge opportunity now that the focus of the innovation has shifted from the higher layer application level down to the infrastructure, because we have realized that how bad the infrastructure is, that it's actually slowing down massively the pace we can innovate. And I think that's where the blockchain can come along and say, can we, instead of just patching things on top of things, making the bad 70s, 90s, 70s API a little bit better, and using COBOL or these kind of antique languages, can we do something more fundamentally disruptive? And can we rebuild the infrastructure from the scratch? And that's exactly, I think, what's happening right now. And the banks, when they look at the blockchain, there's a huge surge of interest into the blockchain industry, both from the more disruptive startup side, but also from the banking and financial industry in general. DTCC, JP Morgan, Goldman, everyone is looking at blockchain and saying, what can we do about it to modernize our infrastructure?
I keep having them sign up on my meetup, so it makes me wonder, like, where are they? Well, how come they're not coming to the meetups? But they're obviously keeping an eye on them, okay? So my other question is, I'm wondering what your vision is of the future with FinTech. Where do you think this is going? And obviously we do have big issues here in the US with the regulations. Mm-hmm. And also my overview is the incumbents also have a lot of power and a lot of lobbying power, obviously, and money. So they're slow to move and hard to disrupt. So I'm wondering what your vision is of what could happen here.
Yeah, I guess it's kind of a good thing that we have, I look a lot from the blockchain perspective, but I think what it represents is that there's a huge external pressure now to push the banks, because previously they don't have much pressure. They're a monopoly, they're large monopolies, they have lots of regulatory barriers, there's not much people can challenge them. Even PayPal is not much a threat to most of the banks. But now there's actually a realistic challenge. And I think that kind of thing will accelerate the whole infrastructure upgrade much, much faster. And once you have a much cleaner infrastructure, then you will see an acceleration on the consumer and the applications end. Like, what's a better application now? We have a peer-to-peer infrastructure, we have a much faster system, much modernized API. What can we do these things, right? And then I think you will see a very similar pattern, I think, unfold. Accelerated venture investments, accelerated talents into the space. Basically, you're trying to, I think a simple way to summarize what's changing with infrastructure is you're turning money into data, a programmable money or programmable capital markets. We don't have that today yet. But once you have that, you'll see, I think, things happen very, very fast. And
Silicon Valley has been a bit slow to the party as far as investments. Everyone tells me different reasons for that. What's your perspective on that?
You mean slow in terms of FinTech investments?
Yes.
Yeah, I guess part of the reason that I mentioned before, I think investment are partially driven by what are the previous exits, right? What are the previous FinTech companies? We haven't seen really much, huge wave of FinTech innovations that are happening. That kind of slowed down by regulations, by market infrastructures. I think it's just a positive kind of cycle. It's also being kind of, I guess, maybe distracted by other cool stuff like in AI, VR stuff, which seems interesting as well, right, obviously. But I think you will see this kind of capital coming back once you have that. Well, the other possibility that, I don't know, but I'm hypothesizing here, is that the success in China, like Alipay and financial, right, could possibly, using their enormous capital and their kind of consumer experience, to replicate the same model to other countries first and then to the US as well, alongside with their, obviously, cash flow. So that does help.
So we might be relying on China to get this valley disrupted.
Could be, yeah, very much. It could be the reverse trend, right? It used to be copy to China, right?
Yes.
And now it could be copying from China. That's not necessarily copying, but, learning, inspiring, a lot of that.
Using the model.
Yeah.
Look, thanks so much. It's been really interesting just having this conversation, and I'm sure it's going to be a fascinating panel. Thank you.
Thank you.